Hello everyone, I'm Siddhant. Today the chapter number 21, Principle and Practices of Banking is going to be discussed. Now in this chapter is the chapter name is Agriculture Finances. So whatever the finances is available to the agriculture sector of our country will be discussed in this chapter. Now moving on, starting with the things that loan is given in the agriculture sector is of kind of short term loans or the medium term loans. The short term loans definition according to the book is up to 18 months. The short term loan is for the up to the 18 months and the medium term loan is more than 36 months. This is the definition given as per the book. Now the most important agriculture finance. Now first we will see what all finances are available under the agriculture finances. There are basically three kinds of the finances. Like the first one is the crop loans, second for the infrastructure related to the agriculture, and third one allied or the ancillary services. Maximum three kinds of the loans are under this agriculture finances section. So what is important? As it's an agriculture, it comes under the priority sector lending. Now the maximum priority sector lending limit or amount is for the agriculture loan is up to the 50 lakh of rupees, and for the allied and the infrastructure it's 100 crore of rupees. We also discussed in the. Now starting with the KCC. What is KCC? It's a readily available credit for the farmers, and it's implemented by the commercial banks, regional rural banks, small finance banks, and the cooperatives banks. And this KCC is again for the short term or can be for the long term loans. Now you must have seen in your bank what the bank do. They generally give it for the 5 years. So we generally give KCC for 5 years, but we can also give for more years if the bank is at its discretion. Now eligibility, who all are eligible for the KCC is land owned farmers, the tenant or lazy or the sharecroppers are also included, and self-help groups or the joint liability groups if they want to irrigate some land or the land in their agriculture, then they can take it. Now what is the procedure to fix the finance for the KCC? Now the KCC can be fixed, it can be categorized, or it can be fined, or the procedure can be followed, depends upon the farmer is a marginal farmer or other than the marginal farmer. For other than the marginal farmer, what is the process of what is the formula is given below, like scale into extent of area of cultivated land plus 10% plus 20%. And what all these are, the scale is provided by the Government of India agency like district level technical committee. It inspect the field of the area and find the particular amount, depends upon the various conditions. After announcing by the district level technical committee the scale of the finance or the scale of the amount which per acre, it's given in the per acre. After that, when the scale got announced by the DLTC, then what area the farmers is having, the bank have to calculate this KCC according to it. Now let's say the farmers have 2 acre of land. Now that scale amount is multiplied with this extent of the area cultivated under cultivation plus 10%. What is this for 10%? 10% of the limit towards post harvest consumptions. The farmers needs this money after harvesting, because the farmers are generally poor in India. So whatever the amount they are taking, they take it as a loan, and they do everything on loan as far as the agriculture is concerned. Now next, plus 20% of the limit is towards repair and the insurance, repair of the farm instrument or the insurance of the crops. This is for the first year. Now the second year onwards, what the first year amount is calculated according to the formula, then 10% increment will be given per year because of the increase in the cost escalations. This 10% increase every year is because of the cost escalation. Now the long term loan could also be given under it. I already told you, long term loans, like let's say the person wants a tractor, the person wants to build a irrigation channel, so that also requires large amount of money, but that can be calculated as long term money, not short term. So KCC also includes the long term money. This is the thing. Now what is maximum permissible limit? The maximum permissible limit for any farmers is equal to the short term loan, that is for the crop production, plus the long term for the infrastructure or any other activities which requires a term loan type of things. Next, the other procedure to find the KCC finance or the amount for the marginal farmers is different. It's very simple and flat, like it's also called a flexi KCC. It's being given between 10,000 to 50,000 only. And what is the definition? The marginal farmers are the farmers who is having a land up to 1 hectare, and 1 hectare is equal to 2.5 acres of land. And small farmers is those farmers which have area of land in between 1 to 2 hectares. Moving on, for the securities required under agriculture finances, as recently, before just it's a 2-month old news that RBI changed the collateral value. Previously in the book also it was written 1 lakh of rupees, but now it got changed. It's 1.6 lakh of rupees. Loans should be given without any collateral, or hypothecation can be done because it's a primary security. Collateral is not required, or the primary can be taken by the banks itself. Now the next point is the tie-up for the recovery of the loans up to 3 lakh can be given without collateral. What does it mean? Let's say some bank has its tie-up with some recovery agents. Then on that case, it's a burden on the recovery agents to bring out the money, whatever the loan the bank has given. So in that case, the bank can give an amount of 3 lakh of rupees without collateral. Above 1.6 lakh loans, collateral can be given on the discretion of the bank. So it's all upon the bank's discretion. If they want to not to take any collateral for any amount of the loan, the bank can't take. It's all depend upon the bank. RBI has given an upper hand on this issue as far as the banks are concerned. Now the KCC ensures mandatory crop insurance plus PIAS and health insurance. PIAS, accident insurance scheme, and health insurance. So these are comes as a package by the government. So it just remember that PIAS is the agriculture insurance given with the KCC, and the health insurance is given. Now the short term loans up to 3 lakh are covered under interest subvention schemes. It's very important. If the farmer wants a loan, wants an interest subventions on any loan which is nothing but a 7%, then the loan must be up to 3 lakh of rupees. And in this interest subvention also there is an additional interest subvention if the farmer pays the loan at a very correct time and he's very prompt as far as repayment of the loans are concerned. Then the another 3% loan subvention is given, and it is exact 4% they are charged for that for the loans. Now the next is minimum support price. So it's a minimum support price is a mechanism by the government to support the agriculture farmers in our country, because what happens, since if the production for something is very high, then the price will becomes very low. At that case, the farmers are at his non-beneficial part. So because they have put lot of money in production, but they are not getting anything as written. So in that case, the farmer introduced that minimum support price. What government do? The government offers a minimum amount which is changed or announced by the government every now and then. Like very recently, the government has announced the minimum support price of the jute, which changes from 3,700 to 3,950 rupees. So these are announced by the government, and if no one will take in the market at that price, the government is bound to take that at the price of 3,950 for the next year for the jute. This is the minimum support prices. And what government do after taking it? Supplies it to the Food Corporation of India or some corporation, so that they can provide the food security. So it's a double sword for the government, because it is also benefiting the farmers. Same time, it's also benefiting the poor destitute who is not able to buy the crops. Now, the price support scheme is similar to the minimum support price, but it's for the wall seeds and the pulses. And minimum support price is for the food or the other materials as given. Now, these price support mechanisms is under the nodal agency NAFED, but minimum support price is under the nodal agency of Food Corporation of India. Next, the NIAS scheme. It's an insurance covered by the government, and it's a National Agriculture Insurance Scheme. It's simple. Now the important questions under it. Okay, the maximum post-harvest loan, I already told you, it's 50 lakh of rupees. The crop loan maximum we could give is the 50 lakh of rupees. If we take if we hypothecate the land or we pledge something, then we can give up to 50 lakh of rupees. The maximum period for the harvest loan is 12 months. The aggregate loans limit for the agriculture infrastructures per borrower is 100 crore of rupees. Loans to the corporate farmers, producer organization, companies of the farmers, which can be counted on the agriculture loans, is up to 2 crore of rupees. As the names you are reading right now, like the corporate farmers, producer, they are not the agriculture farmers. They are a different one. They are actually doing the businesses. So in any businesses, they have to have a very good profit. Up to 2 crore of rupees, the amount given to these persons are counted as an agriculture things. Why this is separately given by the government of India? Because as in the priority sector lending, if these peoples are only counted, then there is no benefit given to the rich, to the poor persons or the BPL families. So the amount is limited up to the 2 crore of rupees, and 50 lakh for the crop loans. If the crop loan is given to this entity, to this person, maximum 50 lakh of rupees are counted as a agriculture loans. And what are the advantage of the agriculture loans? I already told you that the subventions are given, or it counted as a priority sector lending and all, and there is a lots of subsidies and various functions in the schemes, like the insurance as an add-on and additional benefits. There is lots of things. That's why these are classified separately. Now example, what agriculture infrastructure means. The maximum loans we could give for the agriculture infrastructure is 100 crore of rupees. So what it includes? It includes everything related to the infrastructure, like irrigation channel or irrigation canal is made, or setting up a fertilizers plant, which one way or to the other benefits the agriculture of the particular region. So these are included in the agriculture infrastructure. Now agriculture ancillary. What do you mean by agriculture ancillary? This also, the maximum loan is given is 100 crore of rupees. Now what is included? Now the agri clinics or agri businesses. Ancillary means sahayak, the one which helps. So agri clinics or the agri businesses is nothing but helps some way or to the other to the farmers or the agricultural land, etc. That's why the ancillary, these are included in the ancillary. Now the food and agro processing loans to the customer service unit are included in the ancillary services. Now the subvention, I already told you, 2% for the short term and 3% additional if the prompt if the prompt payment is done by the customers. According to the Vyas committee, the crop maturing within 12 months is a short duration crop, and the crop maturing after 12 months it's a long duration crop. Ancillary agriculture, no collateral up to 5 lakh of rupees is required and to be repaid in the 5 to 10 years of time, as all the infrastructure and ancillary are kind of term loans. So whenever the term loans comes, it means it's a long duration loans. Only the crop loans are for the short durations. So these are taking time. So 5 to 10 years is given. Radhakrishna Committee of the Rural Indebtedness. Radhakrishnan Committee is introduced the rural indebtedness in the as its committee. Now the validity period of the KCC is given is as per the bank discretion. I already told you. Electronic KCC is introduced by the TM Bhasin committee. These are important as far as the examinations are concerned. So you must keep these things in mind. 3 lakh and 7% for the short term. Maximum loan under interest subvention is 3 lakh. Up to 3 lakh the interest subvention is applied. After that it is not applied. I think that's it with this topic. I covered what you need is practice of this chapter. Questions from any of the question banks chapter wise is very important. Now as the exams are approaching closer, what you need to dedicate an extra effort so that you could score 7 to 8 marks more as compared to what you have prepared for. And this is possible as far as this examination are concerned. This is possible. So give your best. Thank you.